Welcome to the Value Investor TV podcast. My name is Becco and my partner Hari.
Hello.
This episode, we're going to be talking about Carnival Corp. It's been on the news quite a lot lately because of the coronavirus and the outbreak and people dying on the ship because of the coronavirus. So we'll talk about this company in this episode and the next episode. So Hari, let's get started with a disclaimer, please.
Yeah, this is the Value Investor TV podcast. We are a podcast that helps you grow your wealth and understands the concepts behind value investing. We are not financial advisors, nor do we know your specific financial situation. So please consult with the appropriate advisor before making any financial decisions.
Fantastic. Hari, also, before we start, do you want to kind of walk through the regular kind of routine housekeeping items that we talk about, Slack channel and the checklist?
Yeah. So for those of you who are new to the podcast, we have a checklist that we use for every company that we evaluate, including Carnival today. And if you'd like a copy of that so you can follow along, you can email us at info@valueinvestor.org. Also available is we have a Slack channel where all of our listeners can aggregate and congregate and do all kinds of grading together, and they can ask us questions, post news articles, have discussions about the finer points of investing. So if you'd like to get a hold of us in real time instead of just through email, you can send us first an email, info@valueinvestor.org, and we'll send you an invite to the Slack channel. So, and this is a great place. We have a lot of people from all over the world who sends us questions, comments, and asks us, very interesting questions and help us hone the podcast. They also give us advice on what to record next. So one of the topics that we are going to do in the next episode is called a company called Five Below that was recommended to us by one of the people on Slack. So if you'd like to make a suggestion for what you'd like to listen to, please send us that an email and get on the Slack channel.
Great. And I just want to reiterate this. Carnival Corp, again, this is one of those companies where listeners, one of you, suggested that we look into this. So as Hari said, the next episode 5 that we have ready for you, prepared for you, that's also one of the companies that you guys suggested. Also, Carnival Corp is also one of those companies. So do send us emails about that. So let's get us started, Hari.
Yeah, so going down the checklist, the first question is, what does the company do? And try to be brief with it.
Sure. Let's try to be. Yeah, I know I spend kind of a lot of my time on this question.
I know,
but I like to provide as much color as possible for you guys. But let me try to synthesize this. Carnival basically owns and operates cruise ships internationally. They're the owner and operator of these cruise ships. I think it's especially on people's mind because people have seen those big cruise ships docking in the ports of Oakland or in Japan. These giant boats. It's pretty relevant nowadays because of the coronavirus. They are the biggest cruise tour company out there. They have about 45% of entire global volume in terms of guests and personnel. So quite a beast in this cruise industry.
Yeah, and I think,
is that concise enough?
Yeah, I think it is. One thing that to mention is, where are they headquartered? I think is actually going to be relevant for what we're discussing today.
Yeah, they're incorporated in. So Carnival Corporation was incorporated in Panama in 1972, and Carnival PLC was incorporated in England and Wales in 2000. So this is really, truly a global company that's very distributed. And if you're talking about kind of organization of this company and subsidiaries, they are everywhere. They have subsidiaries literally everywhere. So it's very kind of complicated business with offshore and corporations and things like that. So yeah,
So something to
another
consider.
factoid.
Consider when we talk about risk factors. But let's move down the checklist, and we'll talk a little bit more about the business while we do that. So,
Sure.
does the business have a competitive advantage? And kind of explain to us what that competitive advantage is in these particular categories. So the first category is, do they have a moat by their brand?
I would say yes. So they go against other kind of giants in the space, but they are kind of the dominant player in this space. As I mentioned earlier, in 2019 they had about 13 million guests, and globally about 30 million guests total. So you're talking about a sizable portion of the global cruise volume going through Carnival, and I would say, part of that reason is, I think, a perhaps not big part, but it's still a notable part of that is because of the brand itself. But I would say, there are other reasons to that. Obviously, one being just the size, other being, they have a lot of, that they have a bigger footprint. But kind of going back to your question, brand, I think there is some, but I'm not sure how strong that brand is.
Well, I guess the other way to ask the question is, do people, when they're booking a cruise, are they going to the cruise because of the name Carnival or because of one of their brands? Or are they going to the cheapest cruise that they can find? Or is it based on destination? Or, how do we think about that advantage that they would have?
Yeah, so in terms of brand, I think there are kind of a few different ways to look at it. I think in terms of the cruise industry, and if you break it down, there is kind of low tier brand, like kind of lower tier service, what they call kind of contemporary. There's a medium tier, which is called premium, and then there's a high end, very luxury brand, or kind of luxury services called luxury kind of category. From that perspective, some of the subsidiaries of Carnival are known for that luxury high-end brand, that experience. So that brand is associated with luxury experience. And so for those who are seeking that type of experience, I think brand would matter. But for those who are not, right, for those who are just regular consumers of cruise industry, they would be looking for kind of destination would be kind of on the top of the agenda, and then price, not so much the brand itself. So I would kind of categorize it in luxury and versus not.
Okay. And do you think that so that because they have such a large footprint, do they have any network effects that are associated with that? Is it because they're so for those of you who don't know what a network effects are, is people go to Carnival because other people take Carnival cruises. So the classic example would be something like eBay, where sellers go to where the buyers are and buyers go to where the sellers are. So you have to kind of have both sides of a marketplace in order for it to work. Do you think that applies to the Carnival cruise industry?
I don't particularly think so. I think there is not really a network effect as you define it, as we classically define it here.
Okay. What about switching costs? Is it easy if you've booked one Carnival cruise to then go to a competitor?
Yeah, I think there's no competitive advantage around switching cost, right? I mean, we could go to Carnival this summer and then we can go to something else next summer. There's no cost for me as a consumer.
Is there any moat associated with them being able to provide their service at a lower cost than their competitors?
I would say to some extent, yes. I think that kind of is derived from their strong capital kind of positioning and their experience, and then kind of the wide footprint that they have in terms of their offering. So, yeah.
So do you think that that is because of how they sell tickets? Is it, because they have, the cruise ship industry is kind of like this hodgepodge of ticket brokers and package deals and all these other things. Does that, does Carnival have a control over that part of the industry, and does that help drive any of the cost advantage that they have?
I'm not sure if they control that in its entirety in this industry, but they certainly did mention that kind of brokers are critical part of their success. They need to they are dependent on these third-party brokers to sell and push these tickets out to customers.
Okay. And then the last moat category that we have is intangible assets, and then I'm going to add a moat category after that. But do you think that they have any intangible assets that kind of prevent competitors?
I don't think so.
So,
So I think a classic example of intangible assets might be pharmaceutical companies with their own patents, things like that. Here, I don't see anything that contributes to stronger competitive advantage in that perspective.
okay, so I think there is a competitive advantage here that's that is interesting, though, in that they are an asset-heavy business, right?
Mm-hmm.
And so if Becco and I wanted to start a cruise industry, cruise ship business, there's no way that we could afford it, right? We would not be able to put the capital down to buy a large cruise ship and then start selling tickets, right? So it would be very difficult. We would need a lot of collateral. We would need a lot of cash, to start that. So do you think that because of their size, their scale, they're able to get boats, they're able to buy more assets, they're able to get better deals on, the asset itself?
Yeah, 100%. Actually, I was just curious and looked up average cost of cruise liner. Obviously, there are variations of it, right? You got small ones and then the huge ones, the big ones, the biggest ones. And they vary a lot, but the biggest ones could cost in the billions, single digit billions, and then the small ones on average about $250 million. So again, not I think kind of to your point, that is a competitive advantage from their perspective as an existing player in this industry with giant balance sheet and existing footprint. They do have a competitive advantage from that standpoint. One other thing that I do want to mention associated with that is if you want to operate a cruise ship, it's not just about the ship itself, but also about all these other regulations that you have to pass. You have to have relationships with ports across the world, various places. You have to be able to. You need to be able to operate. You need to be able to source employees to work on the ship, but also outside the ship. As as these ships dock at various places, you need to be able to have that. So that is something that could be hard to get as a new entrant.
Yeah, so I think there is some competitive advantage there, just like an airline industry, right? You don't see too many new airlines coming on board, right? I think the most recent one that I can remember is probably JetBlue or maybe Spirit. It takes a lot of money to get into the business, and I think in the same way that you have to have a relationship with the airport, you have to have. So there's a lot of overlap here, right? In terms of who uses businesses, what kind of the type of business that you're looking at. So, but I think cruise ships don't cater to the business market at all. So there's a special component of this that this is all leisure based. Okay, so let's move on and say we've determined that there is a competitive advantage in that there's a high barrier to entry, and that they have some economies of scale by their size, right? That they are able to buy their assets for cheaper than, because they're able to offer more volume, as well as a brand, competitive advantage. Even though we don't think that one's very strong, it's still there. So how durable is the competitive advantage, and what do you think the risks are to that current competitive advantage?
Yeah. In terms of durability of the competitive advantage, I would say the last one that we mentioned towards the end about having a sizable resources, having a sizable footprint, that as a barrier to entry, I think that is pretty durable. Um, as you mentioned, Hari, like no, unless you can fork over billions of dollars to start a business in the cruise line industry, it's going to be very difficult to crack into it, right? So from that standpoint, competitive advantage, I think there is definitely uh, there. But I do wonder from the vantage point of existing entrants how they play out to each other. Right?
Well, so let's do a hypothetical scenario. Let's say that in December of, I don't know, 2019, there was this virus that came out of, I don't know, let's say China, and that this virus spread all over the world, and it affected cruise ships because cruise ships get a lot of things like Norwalk virus and stuff like that. Mm-hmm. And then that virus kind of shut down the world's economy. Do you, and because this is a leisure business, it's not something that people will spend a lot of money on if they have other things that they need to take care of, or if there's high unemployment. So let's hypothetically say that this virus happened. What do you think the risks are? Could it wipe them out? And as far as, because they have such heavy assets, when those assets aren't being used, they're not generating revenue for them. Is that something that you would have thought of? Just looking at this, just reading their annual report, and would it be, what would the risk to them be, or are they one of the, able to sustain their business through a significant downturn?
Yeah, I think I want to answer that in kind of two folds. One is the brand itself. Well, first of all, I think no one really predicted coronavirus. So from that perspective, every business out there is affected by coronavirus. And I think this is this is no exception here. And from that perspective, it is very, very tough at this point in time where you have these heavy assets sitting around, not really generating a lot of revenue. And now, you have also something we'll talk about, big debt on the balance sheet. That is a serious problem that we have to kind of confront as an investor, and if you're an operator of the company, you have to really kind of face this head on. So that's that. And then the second point, though, is in terms of the short-term survivability. I would say a company like this is actually perhaps better poised to come out of it because they have a large asset base that they can collateralize and borrow against, versus companies that do not have assets to collateralize, and could be much more difficult to borrow money from bank for short-term liquidity issues. So from that perspective, I think they would be okay in kind of navigating through the tough waters in the short term.
Okay, so Becco, the coronavirus has had a kind of an unfavorable presentation for a lot of these cruise ships, right? It's that's what people heard the most, I think, early on when they talked about coronavirus, before it was really a global issue. So how do you perceive that will be affecting their brand moat? Are people going to come back to cruise ships quickly, when the coronavirus quarantines are starting to be lifted? Do you think there's going to be some trust that they have to regain, or in the form of offering lower pricing and package deals and things like that, just to incentivize people, or do some sort of overhaul of the ships to kind of make them safer for respiratory viruses and stuff like that? What's your take on that?
Yeah, so I would like to answer that question in three different ways, 3 different points. The first point is, as I mentioned earlier, the coronavirus really hit hard on cruise ships, and there's in fact a Wikipedia page called 2020 Coronavirus Pandemic on Cruise Ships. You can look it up. And there were 19 ships that were affected by the coronavirus. And if you look at 19 out of 19, 10 of them were part of Carnival Corp. In fact, that part right there about 10 being affected is not really surprising, given the fact that Carnival owns about half of all cruise ships in the world. So that's one point. The second point is, out of the 10 that were impacted, there were a few that really was in the limelight of media when the coronavirus really started to ramp up, as you mentioned, Hari. And both of them were actually part of Carnival Corp. They were not explicitly named Carnival, but they are a subsidiary of Carnival, Princess. So you probably heard Diamond Princess. You probably also heard Grand Princess. These are ships, cruise ships that are part of Carnival Corp. So from that perspective, I think because these ships were really center of the media limelight, I think they would the Carnival Corp, especially Princess subsidiary, probably took a bigger hit than other cruise line companies. But kind of on the third point, how they could recover from this, how they would recover from this. I think, as you mentioned, I think there is going to be a minimum short-term impact, kind of short-term, medium-term impact to the cruise line industry, generally speaking, right? So, I would venture and say, like you said, there has to be some sort of stimulus to boost the consumption of these cruise line tours, like you said. Some kind of promotion or package deal or something like that to really boost it. One thing that worries me is the peak of their season is the summer, right? Q2, Q3. Q3 is kind of the peak season. And I worry that because even though the coronavirus might calm down by Q3, the tarnished reputation of this industry might really put this year's revenue in serious jeopardy. So I think that's one thing to keep in mind.
Okay, we're going to be talking a lot about that, as we talk about financials. So let's kind of look at some more items on the checklist, and then we'll wrap up this episode. What do you think the company's long-term prospects are, and what is their runway for growth? And, I know it's kind of hard to judge that with these short-term things, but let's answer this question specifically from a long-term perspective.
Sure. Let's put away this coronavirus aside, this mythical coronavirus. I would say, so this is straight from 10K. They said global cruise industry and our compound annual passenger capacity growth rates are estimated to be 6.8% and 5.5% respectively from 2019 to 2023. So on average, you're talking about 5% top line growth. And in fact, that's kind of what we've been seeing for the past 3 years, for the past 3 to 5 years. So I would say that's going to be pretty consistent for the next few years if you project out kind of from the long-term perspective. Another element I want to touch on is they as with a lot of companies, I think we have to take this point with a grain of salt. They say China is going to be the next growth engine for their company. And a lot of companies say that. As this is going to be their next growth engine. But I think we have to be careful given the current situation with coronavirus, but also just general perception around China has sort of shifted, I would say. So I would say take this with a grain of salt, but another engine for their growth, kind of the engine as they mentioned in the 10K is they believe, here's direct line from their 10K. We believe that our most significant long-term growth opportunity in Asia is in China. For a few reasons, because of large growing middle class population, to expansion of its international tourism, and then thirdly, government's plan to support the cruise industry. So those are things that we have to keep in mind when we are talking about long-term growth prospects.
Yeah, and I think one of the things to mention about China is that there are lots of brands that entered China that have failed, miserably and have pulled back significantly, and other brands who've done very, very well there. So it's not a guarantee that just because it worked in the rest of the world, it will work in China. The Chinese consumer is obviously different from, even consumers in Japan or South Korea or uh, other Asia Pacific countries. So, there and obviously the government has a big role in the perception there too. So if the government can support it, then it may be, versus the government wants to promote its own local, industry. So, okay, I think this question will be pretty easy to answer. Does the company require a lot of capital reinvestment to maintain its business, and can it grow without any further reinvestments? I've heard cruise ships are cheap and they don't cost anything to build or maintain. So,
Yeah, I think you answered that question right there for me, Hari, already. But if you look at their financial statements, it becomes very apparent, very, very apparent. They spend a lot on CapEx, and if you look at the amortization and depreciation and percentage of CapEx, you're talking about 50% of CapEx going into maintenance, right? So 50% of CapEx going into maintenance, the rest going into buying new boats and things like that. So that's absolute yes. And another data point that I want to present is they have laid out capital allocation for 2020 all the way to 2024 in terms of getting new ships. So this is what they call new ship growth capital. In 2020, 4.8 billion, 2021, 3.6 billion, et cetera, all the way to 2024. So again, to answer your question, it is absolutely capital intensive industry. And this, capital outlay will change, of course, with coronavirus, but it is a capital intensive business for sure.
okay, let's move along. And last question for the episode, multi-part question. Does this business have favorable relationships with the following parties? So customers, any red flags that you see with customers? I think we talked about one already with coronavirus and whether or not people will be readily coming back, given the kind of situation that we're in, and how it was kind of first brought about with cruise ships, and any public health issue is kind of amplified on a cruise ship. So any thoughts there beyond what we already talked about?
No, just want to emphasize the kind of the short term, medium term impact of coronavirus. It's going to be pretty significant, kind of brutal, in fact, for this industry, I think. So, yeah.
Okay. Any issues that you see with their relationships with their suppliers, the boat manufacturers, I do think most of their cruise ships are built in Italy, right?
Yeah, so they have manufacturers from Italy. They're the main ones. There's one in Germany and in Finland. So heavily concentrated in Europe.
And do you think that the economies of Italy being, northern Italy being hit hard with coronavirus, is that going to have any impact on their supply?
I think absolutely yes. In fact, this is, of course, before coronavirus. They were planning on 4 ships to be delivered in 2020. And of course, that plan probably will change with coronavirus in the background. But I'm sure as their business, the cruise industry's business has gone down, the boat manufacturer business subsequently will go down because of the lack of demand, but also workers of these companies are also probably not able to work and return to factories. So for sure, they're going to be impacted.
Okay. And do you see any problems that they have with employees, union labor, or difficulty attracting employees now that there's coronavirus and things like that? Or are they going to have to raise their wages to bring on new people?
Yeah, I think you hit on the point that I wanted to mention. It's going to be, I would say it's going to be more difficult. They are unionized, which, from the perspective of management, could make it difficult moving forward with the coronavirus. Um, and as I mentioned earlier on, this business requires a lot of people, right? Just on board. So we're talking about ships, people working on ships. They have close to 100,000 employees, 92,000 to be exact. 92,000 employees. And then shoreside operation, about 12,000 full-time employees. So overall, you're talking about over 100,000 employees, right? 100,000 employees on their payroll. And many of them are unionized. So it's going to be difficult trying to navigate through the tough times right now.
Okay. Well, I think, we've certainly pointed out some risks, with this business, right? Obviously, the obvious ones being coronavirus and, will people come back? The very expensive capital outlay that's required to make this business work. So there's certainly a lot of things to think about as far as this. But when we talk about these, we want to bring them into account with how do they line up with the financials, and how does that impact the valuation that we're willing to buy with a business like this, right? It's a slow growth business at this point. You said it was growing at 6%. So all things to consider when we do the our valuation and evaluate the financials of the business.
Mm-hmm. Absolutely.
All right. Well, we're going to close it up for this episode. If you have any questions about the checklist that we've talked about, please send us an email, info@valueinvestor.org. And you can also get on our Slack channel and ask us questions about Carnival or any other stock that we've talked about, or any stock that you're looking at. Send us an email, info@valueinvestor.org, and then we'll see you on the Slack channel.
Thanks a lot, guys. See you in the next episode.
All right. Thanks.